So between artificial intelligence and robotics, you're going to be competing for salary with somebody who gets exponentially cheaper in price, because computing power gets exponentially cheaper. So you are net getting poorer. Assets go higher. And that in itself has been a problem, something you and I have discussed, because if you can't buy a house because you're 32 years old and your income doesn't go up, because nobody's income is really going up, then you're kind of getting screwed. Wages don't go up enough. The other thing that's missing from that wage construct is the fact that all the boomers are retiring in record numbers. So that's offsetting the amount of total demand in the economy, because a bunch of people go on no salary apart from on their savings. They didn't really save that much. And then a few others get wage rises. But if you look at the debasement of the fiat currencies overall, that's going somewhere around 13%, 15% a year. So that's driving up asset prices at a minimum of 15% a year. So even if your wages go up 4%, you're the Chipotle worker, well, suddenly you still can't afford as much of the S&P, and you still can't afford as much, a house and all of the same things. So you're still getting net poorer. Assets go higher. And that in itself has been a problem, something you and I have discussed, because if you can't buy a house because you're 32 years old and your income doesn't go up, because nobody's income is really going up, then you're kind of getting screwed. And that's one of the whole premises behind, why I got very, very interested in Bitcoin early on, was seeing this play through. And I think it's just going to continue. I think my current allocation is probably 70% ETH, 5% Bitcoin, and then a tail of others. So why that allocation? It's nothing against Bitcoin. It's not against anything else. It's because I'm a financial markets guy and we use risk curves. So at certain points in the cycle, in the middle of a bull market, you want to take as much risk as possible. So you want to go to the more speculative end of the market. So firstly, I isolated the fact that I thought Ethereum was going to see further flows. It's early in its adoption cycle, and that will probably drive prices further than Bitcoin. And that seems to be playing out. With the others, there's so much going on, it's difficult to monitor. So I have kind of basically a relatively broad-based portfolio to capture some of that move when the tail goes up, i.e. the furthest risk out. And that happens in credit markets, equity markets, all over the place. In equity markets, in a bull market, you tend to get the big leaders first, which is where the safe money is, the blue chips. Then eventually people move to emerging markets, and then they move to frontier markets. And it's in order to get more bang for your buck in the middle of the cycle and generate some alpha. So it's not a comment per se on my relative view on the success of protocols or something like Bitcoin. It's nothing to do with that. It's about, how do I make money out of this crypto investment whilst maintaining my level of interest in the overall crypto world. And so that's where I am now. Where would it be in a year's time? Maybe it's much more Bitcoin again. So it's an asset allocation strategy to try and enhance rewards. So what is an asset? That's the important thing for people to understand here. An asset is basically deferred expenditure. So you stick savings into something that you hope goes up enough in price to offset inflation and other things, and then eventually you get to spend it by selling that asset. Now, whether that's gold or whether it's a house, particularly if it's a second home that you're trying to rent out or do that kind of stuff. So those assets, which are your future wealth, are becoming harder to buy, so you can buy less of them. So you are net getting poorer. And I don't know how you're going to solve that equation. I think the next bet is that fiscal stimulus will do it. But I don't think that's going to be the case, because the Chipotle worker is going to be laid off by robots. And it's as simple as that. We're seeing it in McDonald's, we're seeing it in many places. So between artificial intelligence and robotics, you're going to be competing for salary with somebody who gets exponentially cheaper in price, because computing power gets exponentially cheaper. There's so much debt in the system. There's so much leverage. I think the world is now 400% of GDP in debt. that governments have now realized, and the central banks, that they can't let the collateral go bust, i.e. the asset side of the balance sheet is not allowed to fall in price. Because if not, you get a big margin call on the economy. So it seems to be that debasement of currency to drive assets higher optically is the only answer that they've got now. There's almost no way around it unless they can generate growth that is higher than previous trend for a longer period of time. And with this aging population, all of this indebtedness, globalization, technology, the chances of doing that are low. So Ethereum, again, the charts look absolutely astonishing. The on-chain activity, the adoption is by far the largest of anything in the space. So it's huge what's going on. The move towards ETH 2.0 means that, at a simple level, everybody's going to stake everything they've got to get it there. And so that takes all the coins off the market. There's about 11% of all ETH in circulation. So it's almost unbuyable. So you bring a whale into the market, the price just explodes. So I've never really seen a setup as good as this in that respect. So I think it's a very high quality bet for the time being because of all of this stuff that's either off exchange, being staked, and there's no free supply, and demand keeps going exponential. So I like ETH overall. What's interesting is we're starting to see institutional adoption. So I spoke at Cowen's big event, and it wasn't about Bitcoin. It was solely about Ethereum, which took me by surprise. That's the first one I've done. It's kind of been referenced in other ones, but here I am now speaking to investment banks when they're asking me to come and talk about Ethereum. So I think there's a lot more adoption to come in that space, and I think there's going to be an ETF there too. And again, with this really restricted supply that's going on because of ETH 2.0, I think it drives prices a lot. Bitcoin from a market structure has been incredibly bullish. The pattern now, the chart pattern looks very similar to a smaller version of the one from March to June 2020, where it exploded. We've had this lovely corrective phase. We see all the on-chain stuff. We had the China FUD. We've had a bunch of FUD. This usually, and there's no guarantees, usually October, November, December is ridiculously good, particularly at this point in the halving cycle. So structurally, it looks amazing. So, okay, who are the buyers here? So most people who got into crypto, pretty clear to me who they are. It is the ongoing institutions. I mean, that just keeps going. And I think we'll see an acceleration in that, particularly if the price breaks out, because everybody's like sheep. They always want to follow each other. Secondly, it is the coming ETF. It's definitely going to, definitely, I don't know that, but I just have a very strong feeling it comes in the next, over this October, November, December period. And that will drive a huge amount of money in the space because it allows RIAs to allocate and ordinary individuals in a way that they can easily understand. And finally, I think we're starting to see noise from the sovereign wealth funds. So I know some of them, and I've talked about this before with you, is some of them already allocated, but I think we're going to start to see more sovereign wealth activity in the space.